it is June 1st, right? 6 days away from this new rate announcement.
Yeah.
We can, by the time this launches, it'll probably have happened.
Yeah.
So you guys know, just, be conscious of that. What are your thoughts?
I would say that, I mean, we're going to see at least 25 basis points.
That's what I'm thinking too.
Yeah, they might even go 50.
Oh, wow.
I mean, like, the markets are pricing 44% chance that they're hiking next week and 100% chance that they're hiking at some point by the end of the year. I don't, based on what I've seen from the Bank of Canada, like, they tried their first hike, the 25 bips was like kind of that warning shot. I think we're done with warning shots. I think that they're like literally, and we're done with the idea of a soft landing, unfortunately, as much as that sucks. I think that we have to like really smash the economy and employment especially into the ground in order for inflation to come down. You're at risk of kind of getting into this like wage price spiral where basically, wages are growing, people get paid more money, they have more money to spend on stuff, and then the cost of stuff goes up, and then that just becomes a big bad cycle of inflation that's really hard to take out of the economy. And so I think that, if you look at recessions have a 100% success rate of getting inflation back down to the neutral range. I think that the Bank of Canada wants a recession. I think that they've realized that they can't beat inflation the nice way, and they kind of have to play the hard way. And I think that the Fed's up against the same thing in the States, and we kind of have to try and move in lockstep. The only X factor is oil, right? Like OPEC and how they behave and whatever. But and if that continues to be inflationary, then we've got other problems. But I think that the policy side is pretty well written right now.
Yeah. What do you think this means for the Canadian real estate market?
Yeah, it's interesting. So I think that there's probably more headwinds ahead of us for price. But I would actually say that from a volume perspective, if prices come, like we're at a point right now where housing is as unaffordable as it's ever been, like the worst when boomers talk about interest rates being 20% in the 80s, it's that bad. When you hear about housing prices peaking and crashing in the early 90s, 1989, it's that bad. And so usually that corrects gradually until a recession is over. And we're seeing a bit of a run up right now, right? In the spring, about up 11, 12% since the beginning of the year. And I think you usually see about 10% seasonal growth. But I think we're a bit above seasonal growth, which alarms me and probably alarms the central bank as well, Tiff Macklem. They're probably looking at the housing market and being like, shit, it's not working. Like, we got to crank this up a little more. So what will happen is as things get more affordable, if prices come down, if my assumption here is correct, then more people will be able to buy, and they will. If people, like, everybody wants to buy a house in Canada, and we know we have excess demand for houses in Canada. So prices, like, realtors have this idea that you should be talking about like the market as if it's strong and safe and will always go up. But like, and everyone's like, oh, that's a good way to attract a bunch of people who are never going to buy. But it's like, the market isn't just buyers, right? There's a whole other half of the transaction, which is people that sell. And so I think that when you think about real estate and you think about our profession, we've been getting smoked for the past 10 months, basically, since prices crashed last
100%.
year. Undisputably, volume is down 50%. Total dollar volume is down 50%. So the amount of commission that's being distributed by the real estate industry is half of what it was this time last year. And you have an increasing number of participants in the industry. We have like 100,000 realtors in the province of Ontario now. Yeah. I think it's like one realtor for every, or three realtors for every one listing? No, one realtor for every 3 listings right now.
Yeah.
No, vice versa. Anyway, oversupplied on the realtor side. Yeah. And so like, I think we should be, as professionals, we should be happy if prices come down and more people can afford houses, because that means that we can actually transact. We can actually, and more houses come on the market. Maybe some of these distressed sellers are exiting, which we're starting to see happen now, right? With the consequences of rate hikes and variable rates pushing people into unaffordability, negative cash flow we're hearing about, sentiment changing, and all this negative cash flow condo investor stuff.
We'll talk about that soon.
Yeah, headlines are changing, sentiment's changing, and I think that like, there's this idea, the acronym is HOPE: housing, orders, profits, employment. Employment is the last ball to drop, let's say, in the chain of the lags of interest rate hikes, or the lagging effect of interest rate hikes. Housing is the first one. But on the recovery phase, it's also the first. And the real estate recession is almost over, right? Price is independent of that. But like, recession is how that whole economy is functioning. And we just went through our bad period, and now we're going to go through our well, I think we'll have a long bottom, but a growth period, and kind of lead the recovery out. So that's my thought. That's kind of like how I think things are going to play out over the next little bit. And I think that means like you kind of see a bottom in the next 2 years and a very slow growth. Look at like 89 to 2002. And that, I think the setup is very similar.